Budget 2022 promises a lot, and to pay for some of it, the federal government is pitching a tax on the financial sector, specifically big banks and life insurance companies. The thought? They can afford to help with Canada's recovery.
Certainly, this sector has seen the largest increase in their profit margins during the pandemic, but all across the Canadian economy, companies in major sectors have seen large jumps in their profit margins. So there's no need to limit this just to the finance sector.
Budget 2022 includes a one-off tax on big banks and life insurers, 15% of taxable income above $1 billion for 2021. Those same corporations will also see the tax rate for income above $100 million go up 1.5%. The finance minister's math says that'll bring in $6.1 billion over 5 years, and the 1.5% increase on corporate taxes will bring in $445 million a year. The banks and life insurance companies are skeptical. In a statement, the Canadian Bankers Association says it's opposed to taxing specific sectors but is committed to helping the economy recover. It goes on to say banks are among the largest corporate taxpayers in Canada, even before factoring in new measures contained in the budget. The 6 largest banks in Canada alone paid more than $12.5 billion in taxes to all levels of government in 2020, including $6.5 billion in taxes paid to the federal government. But economist D.T. Cochrane says they pay a lot because they earn a lot of money.
The statutory corporate income tax rate is at an all-time low, has remained at an all-time low since successive Liberal and Conservative governments took it down to its current 15% level. As late as the late 80s, it was above 40%.
The Canadian Life and Health Insurance Association says it's still reviewing the new taxes, which look broader than proposals it heard about, adding that it comes at a challenging time when the effects of the pandemic are still being felt. There's been a long-standing belief that if nations don't keep corporate taxes low, big corporations will go overseas. But Cochrane says things these sectors rely on aren't in every country.
The resources, including the labor resources, those remain here, waiting to be productively employed. So we should be taxing these companies as a way to continue to fund what makes this a place where companies do actually want to invest: our educated labor force, our reliable infrastructure, our sound financial system. All of that requires strong public institutions that need to be properly funded.
In Ottawa, Shally Lee, City News.